It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we cover the latest property news every morning on iHeartRadio, Spotify, Apple Podcasts and Amazon. Well, good morning on this first day of February. Well, that went fast, didn't it? And a question for you this morning: how much have you curbed your spending since November of last year? Now, the reason I ask that question is the recent retail sales data is showing and indicating a 2.7% fall in December, which has raised concerns about weakened consumer spending, particularly in discretionary categories. I suppose it's kind of ironic, isn't it? Because it was always the fear, wasn't it, that we could go from too much consumer spending, thus driving up the inflation and then, of course, increasing the rate rises from the RBA, to now concerns from economists about a weakened consumer spend. Can this be good news for the Reserve Bank of Australia's rate announcement, which is coming on Tuesday? The broader economic impact of declining retail turnover, especially cafes and restaurants, is signalling a potential economic slowdown. So we will wait on Tuesday, bring you the latest news, of course, with the announcement from the Reserve Bank. Well, we are back to the time tunnel this morning with our summer series of real estate interviews. And coming up, we go back to October of last year when we spoke to Alex Rutherford in Brisbane. She gives us some insights into the market last year. And we also find out about the Sydney suburb of Greenwich on the lower North Shore. So that is all coming up for our first day of February next.
Ready to step up your property knowledge? Access powerful insights with us. You're listening to the Summer Series on the Real Estate Podcast.
Yeah, it's a little gold nugget. It's a little peninsula that is next to some very well-known spots. Many people have heard of Longueville or Wollstonecraft because of the train, but it's a little finger of the peninsula that sits in between those two and a little bit unknown. My family is from there, and the whole time we've lived there for 20 years, people always go, where is that exactly? And they don't know. So it is a tightly held little spot. It is a little bit unknown.
And what about Lane Cove? Just put Lane Cove into the perspective of Greenwich.
Yeah, and I think Lane Cove's kind of that nearest main hub. I mean, you've obviously got Crow's Nest as well, but Lane Cove has really developed over the last 10 to 15 years. There was a big development when they put an escalator in, 15 years ago. That was huge news for the Lane Cove area. It was quite sleepy before that. It was kind of known as a place you would drive past rather than into. That has 3 primary schools, and it's become a very young family hub. And then what ends up happening from Lane Cove, you've got your Coles, your Woolies, your Harris Farm now, and restaurants, but people are upgrading eventually from Lane Cove into the more expensive suburbs nearby, which are Longueville, Northwood and Greenwich. And Greenwich is just that one that's a little smaller and is a little less known than say, Longueville.
So you were saying that you went through a bit of a dead patch there where you could count on 1.5 hands how many properties sold, but just recently, worm has turned. You've got a bit of stock, have you?
Well, we're selling it now. A lot of it has sold. But yeah, I think when we came out of winter, it was almost as if we had sort of spring volume in Greenwich. It increased everywhere, like Lane Cove, Longueville, Riverview, all these nearby suburbs also increased. But Greenwich particularly, there was a lot of stock. Normal volume of properties on market are maybe 5 to 8 houses that are available. But I think at one point there was about 16 houses on the market in Greenwich, which that's as high as I've ever seen it, to be honest.
And in terms of, look, we've got a lot of migration that is taking place at the moment. Many people, as you mentioned, haven't heard of Greenwich, but they are flooding into the Sydney prestige market. So how do people mainly find out about Greenwich, do you think? Just through the portals?
Well, hopefully, yeah, obviously the portals, whenever we have particularly a unique property or something that's in the upper end, we do try to get as much editorial across the newspapers as we can, because we realise that people are looking in, say, Mossman or the eastern suburbs and, maybe perhaps even Longueville and still don't know about Greenwich. But we try to make sure people can see a property, see what Greenwich has to offer. I mean, there aren't many peninsulas anywhere in Sydney, in eastern suburbs included, but, Mossman, Cremorne, they don't have access to a train line.
Gain insights with exclusive conversations from real estate professionals about buying, selling and investing across Australia. You're listening to the Summer Series on the Real Estate Podcast.
Look, it is a very, very ambitious plan to build that 1.2 million homes over just a 5-year period. It equates to around 240,000 homes per year, which unfortunately actually is an unprecedented number. So I think, while we do need such a lofty target, realistically, I don't think that we're going to get there.
Yeah, that line from the castle, you're dreaming, mate. Does that come into it?
Look, I think it definitely comes into it, because at no year in Australia's history have we managed to deliver at scale the number of new homes that the government is suggesting. And of course, if we look at the current environment, we've seen significant growth in construction costs. Interest rates are really high. We're seeing building companies entering into insolvency. There's a whole host of market factors which are actually leading to a decrease in the number of homes we're seeing built per year.
Yeah, and of course the expense of it all, I see that your report had 7.4% increase in the weighted average cost of inputs into home construction over the last 12 months, which was ending in June of this year, although this was down from the previous year's peak of 17.3, but it's still a major headache.
Oh, absolutely. Look, 7% growth in construction costs is well above what we would see over the long term. And of course, this doesn't take into account the extra costs associated with increased timelines. So it takes about 50% longer to build a home in the current market. We also have labour shortages and higher interest rates, and all of these add to that cost, which means that each dwelling that gets built is costing a lot more money.
What did your report sort of highlight around the perceived risk associated with building new homes due to the increased number of these home builders collapsing?
Well, this was actually some very interesting information that we garnered from some market research we were doing. So essentially we asked people how confident they feel buying off the plan. And since 2020, there's actually been a notable decline in the proportion of people who are comfortable buying off the plan or who are buying a newly built property. And I think this comes down to what people are seeing in the media about building companies collapsing. There's a higher perceived risk in the sector. And then, of course, it's costing much more to build now as well. So we're seeing more people look to existing dwellings as opposed to going down the path of buying something newer off the plan.
So how does that sort of impact on the actual numbers, the 1.2? Because if you've got more people that are buying existing, how does everybody fit into the box? They can't.
Well, that's exactly right. Developers build properties for someone to buy. And if we do see that demand to buy newly built properties shrink, that's going to have implications for the delivery of new supply. Now, of course, with developers in a position where they're facing higher costs, they also need to sell at a higher price point for their projects to be feasible. And so if you reduce the demand of people looking to buy those new properties, what that means is that for them to get off the ground, often it's more difficult because they're having to offer greater discounts to incentivize people to buy. But if they offer bigger discounts, then maybe the projects aren't feasible and they can't actually be built.
Listen to in-depth discussions with industry leaders on investing options, understanding different suburbs with insider perspectives and exclusive tips. It's time to go back to the Real Estate Vault for this week's property comment.
I'd have to say I would hate to be doing this back in the old days where you had the old dial-up modem, because it was an absolute nightmare. You'd remember this, Mario?
Yes, I do.
You'd have to
hilarious.
wait for it.
Nearly there.
And, you know, the thing was, back then, we thought that was genius.
Well, Craig, I don't mind telling you, I mean, I started in 1984 in my career in real estate, and we didn't even have mobile phones in the UK. So, you know, to actually conduct business was done very, very on a wing and a prayer. We would go on viewings and then come back and say, oh, the person didn't turn up. They say, oh, yeah, they called to say they weren't going to come. But of course, by then, nobody would let me know. They didn't have mobile phones. I think pages were just around there, but I didn't have any. So we did business in a very, very different way.
Yeah, look, it has been an amazing market. We're certainly seeing that uplift of property prices, and it's driven largely by the lack of supply still. Again, the numbers are always a bit different to who reports them, but we're still seeing the lack of stock compared to last year is about 20% behind. So that means there's 20% lower amount of properties for buyers to choose from at this time of the year, which makes us incredibly busy.
They reported it as a tiny apartment. It might have been tiny, but it was pretty big on price, wasn't it?
Yes, it was. So that is actually on the fringe of Brisbane CBD. So it's within a walking distance to the CBD proper. It was 115 square metre, one bedroom, loft style apartment. The first open home was actually launched into the market on a Thursday. Definitely were inundated with inquiry, and it is a leased property as well. So there's tenants in the property, and the first open home we were welcomed with a line of buyers waiting, and we were 10 minutes early. And I think we ended up having something like 23 groups through, but the groups comprised of families and couples. So sometimes we had up to 7 in the group. It was pretty crowded, so much so I actually had to stand in the hallway just to answer questions from buyers. So it was it really was a very exciting result, especially for that one bedroom market.
Do you think that we're kind of approaching a sort of a semi-FOMO at this time of the year with the run-up to Christmas?
Most definitely. So if we look at it, we're the end week of October. We're heading into November. So we've probably got 6 trading weeks left of this year. Brisbane generally starts to tail off around that second week of December. So we're just not sure what this is going to be like, let's say in 2023 finishing off, but we still think it will be fairly strong right up until maybe the 15th or 16th of December this year, just because there are still sellers thinking about bringing their properties to market. We've got to get them ready. They've got to be prepared. They've got to be photographed. And then obviously we might be launching those late November.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on market. Stay informed with us and know your property.
How much of this is happening on the small side of parcels of land where it's being subdivided?
As far as I'm aware, it's only been done twice recently in Queensland, once in Bulimba in the last few months as well. The corner blocks are obviously a little bit more rare, right, on any given street. And therefore, if people are looking to subdivide, most people typically considering a standard split right down the middle. But we've got some owners that wanted to retain some more land so they could build a slightly bigger home for the family using the proceeds of the sale, for which has been achieved.
We connect you to the best real estate information across Australia. The Real Estate Podcast.